Hi friends, today we are going to discuss about some topics in asset owner, that is sufficient appropriate audit evidence and audit risk. Before looking into these topics, let us rewind the topics that we have discussed in the previous video. That is what we have discussed until now as per asset owner, that is overall objectives of an independent auditor, ethical requirements, professional skepticism and professional judgment. Now we will discuss about sufficient appropriate audit evidence. All we'll discuss about what do you mean by audit evidence. Audit evidence is nothing but information used by the auditor in arriving at the conclusion which auditor opinion is based. Means that whatever the information that auditor is obtained during the course of audit, on such information auditor expresses his opinion. Such information is nothing but audit evidence, right? Generally, as auditor expresses opinion on financial statements based on the conclusions drawn on each area of audit, right? Each area of audit, based upon that conclusion, he will expresses his opinion. And what kind of evidence that auditor need? Auditor needs sufficient appropriate audit evidence. Okay, audit evidence is necessary to support the auditor's opinion as well as auditor report. As we discussed before, the main objective of an auditor is to express an opinion on the financial statements. How he will express an opinion based upon the audit evidence obtained. And the next one, as we discussed before, to obtain a reasonable assurance, the auditor shall obtain sufficient appropriate audit evidence to reduce the risk to an acceptable low level. Right? Did you remember in the previous video? Reasonable assurance is nothing but high level of assurance. When the auditor gives high level of assurance, whenever he gets sufficient appropriate audit evidence, then only he will give high level of assurance. Next, we'll discuss about what do you mean by sufficient and what do you mean by appropriateness. Sufficiency is nothing but measure of quantity of audit evidence. Nothing but how much audit evidence need to be obtained, how much audit evidence that he needs during the audit. That is nothing but sufficient. What do you mean by appropriateness? Appropriateness is nothing but measure of quality of the audit evidence, right? Quality of audit evidence. Quality is nothing but relevant as well as reliable. Remember, very very important. What do you mean by quality? Quality is here nothing but relevant as well as reliable. Relevant is nothing but closely connected, right? Reliable is nothing but consistently good in quality. That is the meaning of relevant and reliability. Later in SA 500, that is in audit evidence, SA 500 will discuss clearly in depth regarding sufficient appropriate audit evidence. Now, the next topic means how you will obtain these sufficient appropriate audit evidence. Means for this audit evidence, auditor will follow some procedures. There are two kind of procedures for obtaining sufficient appropriate audit evidence. One is compliance procedures, another one is substantive procedures. What do you mean by compliance procedure? Compliance procedures are nothing but tests on internal control, right, of the entity. Means these are designed to implement on the internal control of the entity. By performing the procedures, auditor get a reasonable assurance that those internal controls are effective and operating through the audit. Means whether the internal controls are effective or not, how he will find through compliance procedures. And next one is substantive procedures. Substantive procedures are designed to obtain audit evidence as to completeness, accuracy and validity of data produced by the entity. Okay, whether the information given here is whether it is full. Complete means full, accurate, and accuracy means exactly, and it should be true, right, true and fair. And validity, whether it is valid or not, everything we can find out through substantive procedures. These substantial procedures again divided into two types, that is test of details and as well as analytical procedures. Detailed concept of these procedures will discuss in the further topics. And the next topic is audit risk. What do you mean by risk? Risk is nothing but uncertainty in result. Means it may go wrong, right? What do you mean by audit risk? Audit risk is nothing but audit opinion may go wrong. That is, auditor may give an inappropriate opinion on the financial statements which may be materially misstated, right? As we discussed before, if there are for example, if there are 1,000 transactions in a company, we will do that audit on the basis of sample. On sample basis we will do the audit. When we do the sample basis, we don't know, means based upon this sample basis auditor gives his opinion. For example, as an auditor he gives a unqualified opinion, clear opinion, the financial statements are free from material statement, but in reality there may be a audit risk, right? As we said before, audit risk can never be zero, so audit risk will be there. So based upon our audit, means as we do the audit on sample basis, we do we give opinion on basis on the audit done by us. So we never give absolute assurance, we give a reasonable assurance. Generally audit risk comprises of two elements, that is risk of material misstatement and detection risk, right? What do you mean by risk of material misstatement? Risk of material misstatement is nothing but the risk that the financial statements are materially misstated prior to audit. Prior to audit, the financial statements are already consist of risk, some risk. That risk is nothing but risk of material misstatement exists at two levels. First one is overall at financial statement level, another one at assessment level. Therefore, audit risk is equal to inherent risk into control risk into detection risk. Now, let us go into the detailed discussion of what do you mean by inherent risk, what do you mean by control risk, and what do you mean by detection risk. First one is inherent risk. Here, in case of inherent risk, we assume that entity doesn't have any internal control system. Inherent risk nothing but inbuilt susceptibility of material misstatement in financial statements, either individually or in aggregate, considering the assumption that there are no internal controls. Of means while conducting always, as we said before, we'll do audit on sample basis. So when we do audit, generally there is a risk. That risk is nothing but inherent risk. Okay. Next, inherent risk is higher for complex calculations and for accounts where significant estimations are involved, which are uncertain. Right? For higher calculation, more complex. Complex is nothing but difficult. When it is when there is when it is difficult, there is automatically risk involved in that, right? Whereas significant estimations is nothing but judgment. So always there is a risk in such situations also, which are uncertain. And factors within the entity and its environment also influence inherent risk. Examples of inherent risk is nothing but, for example, a lack of sufficient working capital to continue operations, or a declining industry characterized by a large number of business failures. These are the examples of inherent risk. And the next one is control risk. This is little bit different when compared with inherent risk. In inherent risk, what we have discussed, in inherent risk, there are no internal controls. But in control risk, we should assume that the entity has internal control system. Here, control risk is nothing but it is a function of effectiveness of the design, implementation, and maintenance of internal control by management to address identified risk. Okay, means here we are discussing about the effectiveness of the design. So whatever the design that is implemented by the entity, whether it is effective or not, the implementation means the design or implementation it is not identifying the risk, that is controls established by the management may not be effective enough to prevent the fraud or errors. Means whatever the internal control that we implement in the entity, that internal control is not working effectively, and we cannot detect the risks or errors. This is due to many reasons. For example, the possibility of human errors. We'll consider example. Suppose you have appointed a person as a cashier in your entity, and the same person is appointed as an accountant in your entity. When the same person is appointed as cashier as well as accountant, there is a chance of manipulation of accounts, right? So this is the example of control risk. Control risk creates a threat to entity's objective relevant to the preparation of entity's financial statements. And for that we can link with the same examples. So he can manipulate the books of accounts. When he manipulates the books of accounts, automatically it will affect the objectives in preparation of financial statements. Okay. Generally, as we said, risk of material misstatement is equal to inherent risk in control risk, right? Generally, the essay do not ordinarily refer to inherent risk and control risk separately. Here, essay will not say inherent risk and control risk separately, but rather to that combined assessment of the risk, that is risk of material misstatement. So audit risk is equal to risk of material misstatement into detection risk. Generally, the essay refers, but in the auditor's point of view, depend upon his judgment, he can consider whether separate or combined. Depends upon auditor's judgment. And the next one is detection risk. Detection risk is nothing but it is the risk that the procedures performed by the auditor may not be able to detect a material misstatement. So whatever the means based upon the procedure that we perform during the course of audit, that procedures may not able to detect a material misstatement. Okay, and this relates to, that is detection risk relates to nature, timing and extent of audit procedures. Why detection risks happen? There are lot of reasons for happening of detection risk. First, for example, inadequate planning. Due to inadequate planning, detection risk happens. Next one is not choosing a right member to do the job. So as an engagement partner or as an auditor, you should select a right member for the right job. If you didn't do the right member, if you didn't appoint a right person to the right job, automatically detection risk arrives. Next, lack of professional skepticism. As we discussed before, professional skepticism is nothing but questioning mind, and you should be able to alert to the conditions wherever there is an indication of possible misstatement. If there is no professional skepticism, there is a risk, there is a situation of happening of detection risk. Whenever there is no skepticism, detection risk arrives. And the last one is lack of supervision or review of audit work performed by the members. So whatever the audit risk performed by the member, as an auditor you should revise and you should supervise. That is your duty. Otherwise, if you didn't do it, detection risk arrives in such cases. Okay, until now we have discussed about inherent risk, that is audit risk, inherent risk, control risk and detection risk. Now we'll discuss about what is the relationship among these components, right? Generally, as an auditor you cannot avoid, that means you cannot eliminate inherent risk and control risk because these are inbuilt risks. Okay, as an auditor, inherent risk and control risk cannot be eliminated. That is, you cannot control. The auditor can assess them. You can calculate how much inherent risk is there, how much control risk is there, but you cannot avoid or you cannot eliminate these risks. Okay, and what is the relationship among these terms? Inherent risk and control risk is nothing but risk of material misstatement, and there is a inverse relationship between combined level of internal risk, inherent risk and control risk with the detection risk. Now it is nothing but greater the risk of material misstatement, okay, the auditor believes exists, the less detection risk. Means risk of material misstatement increases, automatically the auditor will detect detection risk less. Okay, the reason is when an auditor expects greater risk, he performs more audit procedures. Whenever there is a great risk, we'll perform more audit procedures, right? We need additional audit procedures carefully. Hence, auditor obtains the more persuasive audit evidence, then automatically leads to lower detection risk. Okay, so what is the relationship between these components? There is an inverse relationship between in a risk of material misstatement with detection risk. Okay, this is the topic. This is the relationship between components of audit risk. Until now, in this video, we have discussed about sufficient appropriate audit evidence, audit risk, and interrelationship of components of audit risk. Okay. If you like this video, please subscribe to my channel and tap on the bell icon for more updates on auditing. Please like the video while watching. Thank you.